Good afternoon, everybody. We will get started in just a minute or two. I want to wait for people to join us. People are coming in fast and furious, so let's give them a moment and then we'll get started. All right, good afternoon. Let's get started. My name is Bob Cohen. I am a SCORE mentor, and I want to welcome you all to this afternoon, it's not tonight, to this workshop session. And I think you'll get a great deal out of it. I'm joined today with John Croft. John is CEO of Growth Capital, and he's going to be talking to you about making your plan bankable. But first, I would like to go through a couple slides about SCORE, and then we'll get started. So, John, if you hit me the first slide, I'd be happy, and we can get started. There we go. So, SCORE is probably the largest network of free volunteer small business mentors around the country. There are about 240 chapters throughout the U.S. And here in Cleveland, we've got about 100 volunteers that give of their time to help small businesses thrive and grow. And throughout the entire country, there's probably some 12,000 volunteers. So not only can we call on the expertise of any of the volunteers here in the Cleveland market, but we can certainly call on volunteers throughout the country. So we've got expertise just about everywhere we need it. And in many, many areas that if we don't have it in Cleveland, we can find it somewhere else. We do have a lot of great resources here in Cleveland. So next slide, John. Our mission really is to foster small, vibrant business communities through mentoring and education. So by mentoring, that means sometimes one-on-one mentoring with a business expert, with you as a client. It could be two-on-one. It could also be even a board of advisors based on a small business that needs some help. We'll bring in people that have the expertise. It could be, let's say, a marketing person or somebody that is, particularly skilled in a particular industry. And let's say maybe even a financial person to go through your business and to help you figure out what it all is that you need. So, the important thing is that small businesses help to drive the economy of the U.S. Probably close to 50% of the entire economy of the U.S. is made up of small businesses. And that really drives family wealth. It drives wealth to the communities that you're in. And it just helps to grow critical, vibrant communities in our society. And so that's why we, as part of the SBA, focus on small business. And when you hear from John, you'll see what his focus is as it relates to small business as well. Next slide, John. So scores for everyone. If you go onto our website, you'll see that we've got areas very specific to just about anyone that needs to help. We empower all volunteers to succeed. Next slide. We've got a code of ethics, and that is something that somebody signs, all of our mentors sign on an annual basis. We're not allowed to make money in any way from our clients. We can't invest in your businesses. We cannot use any of our information for commercial databases. And probably most important is all of our information is confidential and protected by the government through the SBA. Next slide. All our services are free. So when our mentoring is free and it's unlimited, we will work with you and your company as long as you need us, and we're here for you. Next slide. And I'd like you, if you get a chance, to go onto our website. I'm not going to bring it up live now, but when you look at our website at score.org and then /Cleveland, you can see how easily it is to find a local mentor. And just hit that tab on the lower left, request a local mentor, and that'll walk you through the process. And it's quite easy. So when you request a mentor, what we will do is our client intake person will look at your request. So give us as much detail as you can, where you can outline what it is you're looking for. You'll see that in the form. And we will try and match you up as closely as we can with a mentor. And generally, within about 48 hours, you'll be contacted directly by that mentor. And that mentor then kind of will quarterback with you the things that you need for your business, bringing in other mentors if necessary, but understanding your business and understanding what your needs are. And I think that's the last slide, John. So we can start moving on, and talk to John. John's going to talk to you about, working with financing your plan. And he's got some very particular areas to work in. John Croft, President of Growth Capital. Go ahead, John. Thanks. And I'll monitor the chat. Also, you will be given a copy of this presentation, the recording, as well as the slides. So you'll have that probably within a few days. Go ahead, John. Thanks.
Great, Bob. Thanks so much. And if as you continue the monitoring there, any questions pop up, okay, please. Questions are welcomed at any point in time, okay? I've worked with SCORE for over 2000 was the first year that I had any experience with SCORE. So that's 23 years. And
Wow.
yeah, so everything you shared there, Bob, I can say from my experience in the marketplace, that small businesses that I've financed, okay, have had wonderful opportunities to work with SCORE volunteers. So that's just my quick ad for SCORE. Glad to be a supporter. Thanks for having us today. So I'm just going to tell you a little bit about Growth Capital, and share something about an SBA loan program that most people actually don't even know about. Okay, so first of all, let me just say Growth Capital. We are a private, not-for-profit economic development lender. We've been around since 1982. We are an SBA 504 and community advantage lender. Okay, the SBA 504 loan is only for commercial real estate. It's very specific. Okay, our community advantage loan is for small businesses in any regard. So I'm going to share a little bit about our community advantage loan today and how it might help the small businesses out there. We had a record year in 2022. 2023 was not a record year for us. I just read this morning that demand for small business financing is down, right? Year over year, there's less demand. There are fewer small businesses seeking financing. It could be a good thing, right? They have enough money and they don't need to borrow it. Or it could be there's just less business activity. So everything that you're going to work with SCORE on, okay, is going to get you to the point where you're going to need some financing. So that's what we're going to talk about today. We, in addition to supporting our borrowers, also our lending partners. We partner with banks, bank lenders, and non-bank lenders to bring financing to our small businesses. And this is, I like to say this, it's not your grandmother's SBA loan. Certainly, it's not a lender of last resort. Okay, there are lenders out there that will make those loans. Okay, SBA loans are not those types of loans. Just about any small business is eligible. The size standards are pretty large. It's not a government loan. Okay, it's a loan from Growth Capital, or it's a loan from Huntington Bank. Okay, Growth Capital works directly with SBA borrower does not have to interface with SBA. Our community advantage loans are while not a incentive program with low rates, they're market rates. Okay, they are much more affordable than many fintech lenders, online lenders, payday lenders, if you will. Okay, credit card usage, we see that happen quite a bit. Someone gets started financing their business with a bunch of credit card debt, which can really be harmful in the long run. Okay, I will bring this up though. I heard this at a conference many years ago. An entrepreneur was speaking to the group, and he was asked about the high rate online lenders. And he acknowledged that he needed to take one of those loans at one point in building his business. And he acknowledged that it was expensive. He acknowledged that it was it took a big chunk out of his cash flow. He also said that he would not hesitate to do it again if he needed to run his business. So just very interesting there to hear that from an entrepreneur. It's nice that there are other alternatives than online lenders and credit cards to finance your business, ways that can be much more cost effective, and we'll cover some of that. So the SBA Community Advantage Program is actually quite new for SBA. We've been involved with the program since 2013, but changes have just been made recently. Okay, and some of those changes are a higher maximum loan amount. Previously, it was $250,000. It's now a $350,000 maximum loan size. Okay, so the SBA Community Advantage is there for small businesses. Well, actually, they don't have to be real small either, because I have a $350,000 request for approval here for a company. Okay, that they have $15 million in revenue. Okay, $15 million in revenue, and we're making an SBA Community Advantage loan to provide permanent working capital as this company's in a growth spurt. Okay, we go as small as $25,000 in our Community Advantage loans. Many times they're for the brand new company, right? The company that's a year old. It's maybe a company that has $500,000 in revenue, right? Or $100,000 in revenue. We can go from that 15 million in revenue down to, again, a business that has $100,000 in revenue. It is a program that's required to provide financing to underserved markets. And last year, we actually provided 100% of our Community Advantage lending to underserved markets. And part of the Community Advantage program is to encourage technical assistance, and that's where our friends at SCORE come in. Growth Capital is a mission lender. We do not provide direct technical assistance, so our partners and friends at SCORE have the expertise to provide the technical assistance. So what can the funds be used for? Well, anything. Okay, it's got to be a for-profit business. SBA Community Advantage loans cannot finance not for-profit businesses. Manufacturing. This company's $15 million. They have CNC machines and lathes. They're a manufacturer. Okay, but we also do things like personal service businesses, and we'll cover some of those types of businesses that we've been able to finance with our Community Advantage program over the last few years. It can be used for commercial real estate, which isn't often used for, but we have done commercial real estate purchases that were less than $350,000. It can be used for improvements to property. It can be used to augment working capital, okay, permanent working capital. We cannot provide lines of credit, but we can provide permanent working capital. Debt refinance is good with these, especially when, as I mentioned, business gets started, right? It's on the shoe straps, right, or bootstraps, and maybe some credit card debt was used to finance that business. Many times it's good to refinance those higher credit card accounts into a community advantage loan, and we do that quite frequently. And also business acquisitions. There are many businesses for sale out there that are less than $350,000, and the Community Advantage Program is a nice alternative to meet some of those needs for business acquisitions, small business acquisitions. Bob, question?
Yes, I have a question that came in. We are a new business under 2 years and only have less than $100,000 in revenue. Would they qualify for the Community Advantage loan?
Yes, they certainly could. Yes. There are no revenue requirements. Okay. So yeah, I've seen small businesses that are doing $50,000 a year in revenue, and they can make money for the owner, right? It's every business is unique, okay, and every business's cash flow positions are different, right? Their needs are different, but yes, $100,000 less than 2 years, we do those all the time. Any more questions come in, you let me know, okay? Okay, so there's some things I really want to touch on here. Okay, I had mentioned that this is not a loan of last resort. Okay, but there are things that are going to prevent a small business owner from obtaining a small business loan. Okay, so what are some of those things that are going to make that business not bankable? Okay, or as I like to say, not yet bankable. Okay, because you work with Bob and our friends at SCORE, and believe me, they can help you get bankable. Okay, but these are some of the things: low personal credit history. Okay, if you don't know your credit history, it's free to obtain. Actually, many of these companies make it easy for consumers and individuals to manage their credit history. Okay, I started making loans back in 1990, blah blah blah. Okay, and at the time, it was almost this magical number, right? That even as a lender, I mean, we knew the numbers, but we didn't know how they were made up, right? And we couldn't even. Consumers had no way to obtain it, right? Maybe there was an 800 number that you could call and wait in line, and maybe you send a letter. Or now it's actually much easier to manage personal credit history. So a low personal credit score is going to be a big problem with a small business loan. Some other things: limited personal liquidity, limited personal net worth. Okay. Sometimes banks just don't like to lend to sole proprietorships, right? They want to lend to a corporation. As was mentioned in the last question, Bob, sometimes limited business revenue precludes a lender from approving that loan. A limited business balance sheet, again, very little assets. Many service businesses, small service businesses, they have few assets, right? Tight cash flow coverage, okay, and limited collateral. All right. Now, what I'd like to point out is, while a bank is going to look at all of these, okay, we have the ability to be that just miss bank loan, right? So I call it the just miss, right? Because maybe the personal credit isn't the strongest, right? But it's not poor, right? Maybe the personal liquidity isn't real large, but they have some liquidity, okay? Maybe the cash flow is tight, Those are the types of loans that many times a bank can't do because of regulatory considerations, or because of profit considerations, right? We have the ability to make those types of loans that, again, I like to call the just missed bank loan. Okay. Oh, wrong way. Okay. So these three areas, I think, are they really set us apart from a bank lender, okay? In that we can look at lower personal credit scores, okay? A bank may have a say a 720 or a 680 FICO score cutoff, right? Like that, if the number is not the number that the lender needs to see, okay, then they're not going to do the loan, okay? We don't have that, okay? We are able to do loans for individuals that have less than perfect personal credit, okay? The other big thing, okay, is that personal liquidity, we really, the way that we look at a loan as opposed to the way the bank looks at the loan, okay, the bank will only look at the business cash flow, okay? We look at it globally, right? Many times a small business owner has outside income, whether it's a spouse who is employed outside the business, okay? Or many times when it's a new business, it's a startup business, someone may maintain their full-time or part-time employment while they operate their business. So we can look at that where a bank is not going to be able to, okay? And we require no personal net worth requirements. Many banks require that the borrower have, at least $10,000 in net worth or whatever that may be. So from a credit standpoint, okay, that just miss aspect of the community advantage loan allows us to make loans again where a bank would not, and provide capital to a small business owner that otherwise would not have access to that capital. Some of the things that again can be issues, right? Some things to take into consideration, okay, is sole proprietorships, right? Finance from Schedule C income, right? I just talked about that global cash flow, okay? So again, we're able to look in those regards. Small businesses produce small revenue numbers, right? We had a question, the less than 2 years and less than $100,000 in revenue. It's small, it's okay, right? Negative net worth of a business, that's going to happen a lot with especially a newer business, in that they take on more debt than they have in equity. So I see a lot of negative net worth in small businesses. This is probably one of the areas in which we have much more latitude than other lenders, okay? And that's in the actual cash flow coverage, right? Cash flow coverage is the number of dollars produced in cash flow to cover a dollar in debt, right? So many banks require at least 1.25 times cash flow coverage. That means for every dollar of debt service that a business has, they produce $1.25, okay, in cash flow, okay? We only got to have it 1-to-1, okay? So that's a major difference, okay? And again, many small businesses have the challenge of tight cash flow. We take collateral, okay, but we're not going to be fully collateralized loans here, okay? So while collateral must be offered on loans in excess of $50,000, we are not required to have the loan fully collateralized, okay? And I'd mentioned startups, okay? We can do them on a limited basis, okay? And here's how we do it. I had mentioned it earlier, outside income, right? Global cash flow, that's how we look at it, okay? It's someone with industry experience, right? If someone comes to us and they've been hungry for 50 years, so they figure they can run a restaurant, all right, and they want to borrow money to do it when they have no industry experience, no other job or outside cash flow. So those are kind of tough to do. All righty. Again, not a loan of last resorts. Okay, so the community advantage loan can help those businesses be bankable. Okay, once we've made that loan. Okay, so what it's going to do, it's going to build, a solid credit history with timely payments. That's certainly required. All borrower payments are ACH, right? So no one has to remember, oh, I got to write a check for my SBA payment. No, all of our loans, all of these community advantage loans are on 10-year terms. Okay. Most banks, if they're going to borrow or lend, say $100,000 for a new piece of equipment, it's going to be on 5 years maximum. Business wants to borrow, say, $250,000 for permanent working capital. Maybe that would be on a 4-year term. Okay. All of our loans are on 10 years. Okay. And that's to provide the lowest possible payment for the borrower. And that makes a big difference. We also have the ability to offer deferments when they are appropriate. Okay. We do connect our community advantage borrowers with sources for technical assistance, our friends at SCORE, Small Business Development Centers as well. There are no prepayment penalties. Okay, so a 10-year term is fine when you can pay it off in 2 years if you want. Okay. The rates are higher than banks. Okay, our rates the rate on a community advantage loan ranges from prime +4 on loans from 250 to 350, 150 to 250 for prime +4.5, and on loans under $50,000, it's prime +6. Okay, so it's not an incentive program with low rates. It's an access to capital program. Okay. The higher rate does encourage refinancing, right? So if that business can get bankable through utilization of a community advantage loan, okay, then yes, they're in a position to go to a bank, refinance our higher rate loan, get a lower rate loan with a bank lender. Okay. So these are some of the types of businesses that we financed. Okay. Fruity Cakes. There's a bakery. Okay. Miller's, a restaurant in Manaway. Small operation. Okay. Extreme Marketing in North Royalton. Okay. A service business. Okay. Great Clips, franchises. Yes, we can do franchises. Okay. This Ramsey Rooney transaction that we did was actually we did 2 transactions for 2 separate Great Clips locations. So yes, the community advantage loan is good for small franchise loans as well. So those are some of the types of businesses that we've financed recently with our community advantage program. Tried to give you an overview of how we are able to look at a loan where a bank is not able to look at a loan in that regard. So that just miss aspect of the community advantage loan. So if you have any further questions, Bob and I can field them.
I do have one question that came in through the chat. Currently a graduate student, and wanted to know how student loan debt would affect the possible loan application.
Yeah, okay, great question. So 2 things that we're going to look at there. Okay, one is that they're not in default. Okay, because if they're in default, the borrower is not eligible for an SBA loan. If there's default on any government guaranteed debt, okay, the borrower is not eligible. Okay, but assuming that student loans are in good standing, okay, then what we do have to take into consideration is the impact on personal cash flow, right? What's the personal debt to income ratio when those loans, those loan payments, okay, when they begin? I know I was making my my loan payments when I graduated school for I think I had a 10-year term on my student loans, and maybe I retired them in about 8 years or something like that. But I remember, you know, I had to make that payment every month, that student loan. So that's how they got to be current. If they're delinquent, not eligible, and then if they're excessive, I mean, we've done community advantage loans for, say, a doctor, right, or a dentist, right, and they're small practice, right. So we're going to do a community advantage loan for them. Sometimes veterinarians see those as well. Sometimes we'll see hundreds of thousands of dollars in student loans. Okay. And we take that into consideration like any other loan.
Okay, that's a good one. So I have another question. What is your basic eligible credit scores that you look for?
Okay, as I had stated, we don't have a cutoff. Okay, I'll tell. I've been analyzing credit reports since 1992. Okay, and yeah, I know a FICO score of 815. Okay, is better than a FICO score of 630. All right. I can tell you that I've looked at high credit scores, okay, and have said I won't make this person a loan, okay. And I've looked at low credit scores and say, yeah, this is a deal I can do, okay. Many times, it's the amount of debt outstanding, okay. So you can effectively manage payments on accounts, right? Like to maximize your actual credit score, okay, you want to have things like several accounts, right, with history, making payments, right, active accounts, okay, never any late payments, right. That's going to maximize your credit score, okay. But what that doesn't always catch is the over leveraged borrower. Okay. Like I said, I can see, if a lender does nothing than credit score loans, and the math and the science, it works, right? You do 1 million of these at this number, and the probability is you're going to charge off 10% of them. Okay, whatever the math is. Okay, so you can do that. We don't do that. Okay, we underwrite loans the way loans are to be underwritten, right? And sometimes it's just looking across the table at someone and getting a feel. Yeah, do I think this person is going to repay the loan, right? Regardless of what their credit score says. Now, a credit score does say a lot about an individual's character. Okay, so it does come into play, and a big part of it. Okay. It's certainly, I'll tell you, it's a very easy screening tool for lenders. But if it was just that number, as I said, saying, okay, I'm not saying there's a cutoff. We don't have a 740 cutoff, okay? But I'm telling you, like when scores start to get into the low 600s, those can be difficult to get done.
Okay. Another question, is growth capital only tailored to Ohio residents?
Correct. Yes, we are only authorized to make loans in the state of Ohio.
Okay. So someone's in the transportation industry. Is it a high risk industry?
Yes.
Okay.
Yes. Any logistics business right now is considered a high risk industry.
Okay, that's a good one. So let
And that
me ask you,
changes, that changes over time, right? I mean, some industries are, always considered high risk, right? Transportation, logistics, have been at times, but most certainly in the current environment, yes. Yeah, it can be hard for logistics companies to get financing right now.
yeah, okay. So I have a question for you, John.
Sure.
If I'm ready to come to you and apply for a loan, what do you need from me?
Well, all I need really is an email address, okay? So I can send out a link to our online application. It's that simple, okay? And then on that, we're going to ask for information, all right? Standard application information. And you're also able to upload application documents that are required. 3 years tax returns, right? We're going to require a personal financial statement, okay, and personal tax returns, okay, and interim financial statements within 90 days, okay. And this can be a challenge for some small businesses, Bob, in that yeah, they may go to their accountant, or maybe they just go to a tax preparer, right? And they get a Schedule C done if they're a sole prop, or they get their 1120S filed. But in between, they're not keeping the books, right? Or if they do, they're not very valuable, okay? So keeping good books, okay, is extremely important to be able to present to a lender, okay? Hey, here's my business. Here's what it looks like this month. Here's my balance sheet. It ends at the month end, right? Hey, when I see a balance sheet with the 15th on it, right? No, it's always the end of a month balance sheet, okay? And when they don't balance, it's never a good sign either, right? But when it balances, okay, good. So those are the things we're looking for, okay, Bob, for us to actually be able to process the
Do,
application.
do you need any like 3-year forecast and sales, or do you need any business planning tools that are done?
Okay, so here's our approach when it comes to the requirements for business plans. Okay, if the company cannot present financial tax returns and statements to demonstrate sufficient cash flow to service the debt, okay, then that's when we want to see projections, financial forecasts, and a business plan. Okay, if, however, their application includes 3 years of tax returns and an interim statement that shows their cash flow at 1.3 times coverage, okay, then yeah, it's a little bit easier that way.
Sounds good. Okay, I've got a bunch more, so I'm just turning my head to another screen. It's easier to
Sure.
work with, so forgive me on that.
Oh, all right.
Let's see, transportation we talked about. We are a logistics company, but we serve the government, and they've got government contractors. Would they be excluded?
No.
Okay.
No.
Here's somebody that owns a mini mart with gasoline and a gas station. Are they eligible to apply?
Yes.
Okay.
I will tell you that doing real estate loans for C stores and gas stations is pretty tough because of the environmental considerations. Okay, but yeah, we do C stores all the time. It's great. Community Advantage is a great fit for convenience stores.
Perfect. Good, good, good. Let's see if I have anything else. I am not seeing anything else. If you all have any other questions, I think we've answered so far every one of them. Let me just take a look.
Yeah, I may be out of answers, Bob. I mean, that's that's all I know. We can't take
Out of
any more
questions, out of
questions.
answers. That's good timing. Okay. I'm not seeing anything else. If anybody else has anything, feel free to put it in the chat or in the Q&A, and we'll get them answered. This has been very informative, John, and I think that you all will see that it's not impossible to find funding for your businesses if you're going to the right sources. And certainly, we've been working with Growth Capital, as John said, for a long, long time, and recommend them for these types of loans. So. If you need help from SCORE, by all means, feel free. Let's see, I may have another question in the Q&A. Yeah, no, it's just thanks for doing this. So thank you, Mike, as well for attending. Um, anyway, let's see if any other questions. If not, then I will call it an afternoon. I really appreciate everybody getting together at this hour of the day. It's a perfect time for those that have the ability to do so. But and you as well, John, for flying in early this morning and being available to do this. So
Yeah, I got
um,
back here just in time for the 10-degree weather, Bob, and I'm not real happy about that.
so what was it when you left?
I left Florida. It was in the 60s.
Oh, okay. Well,
Wasn't
hey,
that nice? Wasn't that nice?
cool, but okay, right? So,
Yeah.
somebody has asked, "Is this recorded?" And the answer is yes. It's not. It's we just did it live on YouTube, so there is a recording on YouTube. It will be unedited, so I promise it won't be pretty, at least in the beginning. But eventually, we will edit it and send it out to everybody. So if you want to just wait, it'll come. If you want to go get it on your own, you can retrieve it at Score Mentors Cleveland, I think is the YouTube channel. And there's a bunch more on there as well. Also, if you are interested at all in any of the workshops that we do, there are recordings basically on our website under, if you go to score.org/Cleveland and then look at workshops and recorded workshops, everything we do is on there now, as well as a calendar if you want to take a look at other workshops that are coming up. And I think that's the last one so far. So with that, I will say good afternoon, everybody. Thank you for joining us. Look forward to having you join us for others